There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Wednesday afternoon. I'm Juliette Sarley. Great to have your company on a day where we started out with a bit of a shaky start, but then we have managed to finish slightly higher there on the CBO 200. The ASX 200 looking like it is going to close firmer by an impressive 1/3% there, so a much more strong momentum coming through on the ASX 200, particularly led by Judo, of course, that upgrade from Citi lifting it. Weakness in the Lithium players. But let's get to the overall themes of the day. On a day where we saw the ASX ascend today despite that shaky start, and of course, worth putting into context that we have basically now followed the leader from Wall Street, which hit those records again overnight. Those lithium losses, though, that I was discussing, this is on this news that China is going to reopen its CATL lithium mine in Yichun, really weighing on lithium prices. And those concerns that new supply is going to weigh even further on the commodity, sending some big losses coming through from the likes of Pilbara and Liontown, down more than 15%, and I think both having multi-year weakness. Liontown having one of its worst sessions since early last year, and Pilbara Minerals on track for its worst day in more than 3 years. And then, of course, we're looking at cost cuts too. Now, a big one, we just heard from Novo Nordisk, the Wegovy maker, going to cut 9,000 jobs, trying to save $1.3 billion US. It's competing, of course, with Eli Lilly that makes the Mounjaro GLP-1 drug. A lot of these losses coming through in its hometown in Denmark, but at home as well, we had NAB following the ANZ with another 400 job cuts after ANZ announced 3,500, which we should note as well, the head of ANZ markets is among those that will be leaving. So the chief of the markets, Anshul Sidher, to leave the bank effective immediately amid this broader restructure that means 3,500 jobs at ANZ are being made redundant. Let's have a look at the banks. We are seeing some upside there. I mentioned as well that Citi call on Judo. They also really like Westpac. Westpac up by 1.6%. ANZ, they're up by 2%. Looking at those lithium players, I mentioned some big falls coming through, particularly for PLS, now extending that loss down 17.4%. Liontown down by 18.4%. Now, energy, we did see an uptick in crude oil prices overnight after the Israeli military said it carried out an attack on Hamas in Qatar's capital, Doha. A little bit of a mixed momentum there, but Santos and Woodside, along with Beach, following the crude oil price higher. NAB, I mentioned, has announced further job cuts. We also had news today from Brambles issuing its 2025 sustainability review. It hasn't met all its targets. They'll be pushed out now to 2030. Metcash providing a trading update, says sales growth continuing in all pillars in the 18 weeks to the end of August. Vulcan Energy there granted approval to build and operate its central lithium plant in Germany, but it was dragged lower by these lithium moves today. And Iluka hit hard as well. It's going to halt production at its CATL mine in WA from December due to subdued demand. We also had Soul Patts holding its AGM. Shareholders, of course, voting on that tie-up with Brickworks, which will leave the ASX 200 on September 16th. And PointsBet again just saying, hey, take that deal from Mixi. I think they've already got voting control anyway, that Japanese company. All right, let's welcome to the COB Mark Gardner from MPC Markets on a day when we have seen a little bit of upside coming through, but as I mentioned, weakness in lithium here.
Yeah, look, the restart of that mine, I mean, it probably a little bit earlier than everyone expected, but it doesn't really come as too much of a surprise. And look, I guess if you look back maybe 3 or 4 months, you probably holders of Pilbara and Liontown would have killed for the prices that it's fallen to today. I think it's a little bit of an overreaction, but yeah, it's been it's a tough old market, lithium, and you've got to have a very strong stomach to survive the last the last year or so. But I think Pilbara had a really outstanding couple of days last week. So it's whilst it looks very bad on a one-day basis, I think people would have been quite bulled up, not expecting that potential reopen to come through as soon as it has. So probably caught people off guard, and hence what looks like a very shocking sell-off.
Yeah. All right, let's get to the banks, and I guess more broadly what we're talking about in terms of job cuts. I mean, there's Novo Nordisk one, which is not a bank, but that's huge, 9,000. Is this a broader theme that we're getting into?
Yeah, look, we had the annual revision of US payrolls last night, and 911,000 jobs wiped further off the jobs numbers. So I always sort of said we hadn't had a negative payrolls number until since December 2020, but as it turns out, we've been having negative payrolls numbers for most of this year. Chief economist of Bloomberg's been saying that effectively with that revision, we're almost, he regards it as probably in a recession for most of the year. That's the highest ever revision to an annual jobs data in the US, and the second highest was leading into the GFC. It's going to have some severe consequences, and I think it's a smoky now for a 50 basis point cut in the States. But as JP Morgan outlined last night, they're recommending clients sell into it because it'll be for very much the wrong reasons. And these inflation numbers that are coming up in the next few days, we're essentially textbook stagflation now. If CPI comes in or anywhere near the 3% mark, that's inflation on the high side and a very weak labour market, which will just, the knock-on effect for that will be quite huge in terms of the economy. But you've also got this mix where you've got industrial revolution style AI, where Oracle was up 29% in the aftermarket, its biggest ever one-day gain. Well, it will be tonight. It was in after they commented on the hyperscaling for the data centres and the amount they're looking at $500 billion in contracts potentially over the next 3 to 6 months. So it makes it very difficult because one particular part of the economy, which has a lot of concentration risk in the indexes in the US, is doing very, very well, but the broader economy is not doing very well. That mixed signal, everyone keeps focusing on the positive, but I think that overall we saw comments from Salesforce saying their customers are winding back their AI spend really heavily at the moment. So I'm a little bit concerned about where we sit, but I think it very much reaffirms that we're going to definitely get at least that 25 cut in the US.
And maybe 50. And then maybe another 1 or 2 as well.
I think based on that jobs number and the trending weakness in the US, I think we'll get anywhere up to 1% this year. So 3 25s and maybe a 50 in there somewhere.
Yeah, wow.
And I'm not usually in the rate cut camp, but those revisions they're pretty horrific overall. But literally they came out at 5:30 in the morning, and then Oracle released their earnings an hour and a half later, and the shortness of the news cycle, it was kind of just bumped off. But because they were categorically outstanding results.
Well, let's get back to our market. The banks in particular, I did mention ANZ, NAB, job cuts, but Judo Bank, I mean, it looked really good today on the back of that broker call.
Yeah, and look, it's still cheap. If you look at forward PEs, I think ANZ and Judo are around about 15 forward PE. So they're the 2 cheapest banks on the board still, even with that move today. So I think Judo is a really good opportunity. It's been in our small caps, high conviction small caps for over a year now. And I've always been a bit of a fan for the last couple of years because the Big Four's got such a stranglehold. But I mean, the last time you were able to get in anywhere near the ground floor in an Australian bank was like the 80s. So I think it'll be a brilliant sort of wealth winner over the next over the coming 5 years. And essentially they're doing very good things in terms of the business banking. They're a neobank, so they're not going to have all those excess staff, etc. So they're going to run very lean. And growth is quite easy, and they don't have to worry about branches and etc. So I think judo will be, a very consistent winner for at least, the next 3 to 5 years.
And do you think that what Nuno Matos and I guess what NAB's doing too is just the way that we're going? I mean, particularly a lot of these...
Yeah, it's a sign of things to come. I mean, the joy of AI
Yeah.
is not necessarily the joy for those low-level jobs that you can automate. So, and there will be a point sometime in the next couple of years where there are significant job losses, because a lot of things will get more and more automated. But I think in the wash, it'll be quite shocking at the time. But in the wash, people will generally go to higher level roles, and they'll be solving more complex problems. But there'll be an immediate sort of shock to the system. But we've seen that in past, the internet boom, etc. And more jobs tend to come out of it. But things like developers, for instance, I mean, the barrier to entry now for being able to develop software is what used to cost $1 million or $2 million in a year now costs less than $100,000 in 2 months.
Yeah.
And so I think some of those moats for the likes of companies like WiseTech, Technology One, etc., if they don't keep up, they're not as wide as they used to be, essentially, because you don't have that barrier to entry anymore. That the big companies had the advantage because they had the money to spend. So the low cost startup really does benefit from the AI thematic. So, and things like call centers, things like robo advice, etc. They're more compliant, and they're quite often, and they're better served by those bots.
Yeah, I want to tell a little story actually, Mark, because this blew me away. Like, everyone always pays me out in the office about my online shopping, but I got something delivered today that I bought online, obviously, that's all doing through an app. It was too big, so I went to say, can I return it for a different size? It was all done within like 2 minutes. Literally at the bottom it said, this is an AI automation.
Yeah.
Like, that's something you would normally have to call, or...
The travel apps in particular in the States, some of the travel apps now, it's like having like your travel agents on your phone 24 hours a day.
Yeah.
And there's an app in the US called Do Not Pay, which goes and challenges your bills. It'll actually cancel your subscriptions you don't use. So that's going to eat into, because that laziness we have with those monthly subscriptions, that's a nice little premium that a lot of services have. So there'll be different way. AI is going to change things, and we're in the very early stages. But yeah, I don't disagree with the job cuts. I think was it ANZ was criticised for overhiring, or Westpac it may have been. But some of these low-level jobs are going to be are certainly going to be. The more concerning thing is that they quoted net interest margin pressure being an issue. So that doesn't bode well for next earnings, and the high valuations that the banks are sitting at the moment. You don't need much for them to take the wind out of their sails. So.
All right, Mark, thank you as always. Mark Gardner from MPC Markets, and of course, speaking of the banks and Judo Capital, that was the stock of the day. Michael Gable from Fairmont Equities, Philip Pepe from Shaw & Partners join Nadine on the call.
I'd call it a buy. It amuses me that brokers are upgrading their bank price targets. If you notice that even in the major banks, where most of them have been rated sells, price targets have gone up as people have one eye on the share price, one eye on their model, and decide what's my price target going to be. Impressive. They're focused on the SME market. Recent APRA data suggested that market's growing strongly. They've got a market share of about 1.5%. I think they aspire to get to 3%, which means EPS doubling over more than doubling, tripling from 7 cents to 21 cents over a 4-year period. If they can deliver that, and if they can maintain that net interest margin at 3%, that's better than the majors.
This will always be much cheaper than the majors. The majors get great cost of funding. They have very predictable sort of cash flows and earnings. So that's why all the passive money just goes in there. It's just you don't have to think about it. So Judo will have periods where I think it can do really well, and then they might have some hiccups along the way, and then it gets sold off. So I think it's in a zone at the moment where they're doing a good job. It looks good value.
All right, we managed to turn things around today. Let's look at some of the leaders that helped us get there, including Clarity Pharmaceuticals, Judo Bank that we've touched on. Telix was there as well, Mesoblast and Gen Development. All right, to the laggards, it really was all of these lithium players that we touched on with Mark. Liontown there, down almost 19%. In the small end of town, some of the winners included these stocks on your screen, including Sunrise, which was up 14.5%, while the laggards included Botanics Pharma, down by some 17%. Well, tonight we talked about the key data that's coming out of the US this week, and we've got US PPI tonight for August, with headline PPI expected to increase by 0.4%, while tomorrow we get a little bit more data in terms of how we're spending. I just told you what I'm doing. Well, the CBA household spending insights for August will be released, and also some more ex-div companies as well, including Breville, Nine Entertainment, Perpetual. It has been a positive end, though, up 0.5% there on the CBO 200, the ASX 200 closing the session higher by 1/3%, 8,830. And really, if you take out that weakness from the big miners, so BHP and Rio were under pressure as well, but along with that big fall in lithium, it was a pretty good day. I mean, the material sector down almost 2%, but take that off and banks are up 1.5%, telcos up by 1%. So yes, we will take that win. We will do it all again tomorrow. Be interesting to see how Novo Nordisk and Eli Lilly trade as well after that news that Novo Nordisk is cutting 9,000 jobs. Join us from 9:45 a.m. Eastern tomorrow.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.